Billionaire venture capitalist Chamath Palihapitiya warns that the Russia-Ukraine war has a chilling undertone. He believes this war differs from conventional war and that the impact it will have on investors, crypto, and pension funds will be immense. This video highlights some of the ways this war will affect the economy and sheds some light on the outlook investors worldwide should be aware of. So stay tuned to your top tech and trades channel. Chamath said that we're not even at the beginning, because we're at the beginning of the beginning. We are now teetering towards a recession. According to Chamath, what's interesting to note is that it's not always the case that the price of energy has risen by 50% in a recession. But it's always the case that when energy prices spike by 50%, we enter a recession. The United States has launched sanctions aimed at Russia's central bank. The European Union did the same thing. The Central Bank of Russia will be unable to convert $643 billion in assets held in US dollars and euros into rubles as a result of the sanctions. Russia is also unable to access its National Wealth Fund, which serves as an emergency sovereign wealth fund. Furthermore, the US and the European Union have announced that all Russian banks will be shut off from SWIFT, with the exception of those involved in the energy sector. SWIFT is the world's largest network for initiating international payments. One of the most severe economic acts that may be done is to exclude Russia banks from SWIFT. Prior to this, the US and the European Union had chosen a cautious approach to sanctioning Russia. Because of the close economic ties between Russia and the EU, policymakers were hesitant to impose harsh sanctions on Russia. However, in this fast-moving fight, a complete ban on SWIFT transactions for Russian banks now appears to be a possibility. Due to the severity of the sanctions imposed on Russia, many are concerned that Russian President Vladimir Putin doesn't have a way of exiting from the invasion without losing face. This implies that if he believes he has no other options, he may lash out in an unpredictable manner. As a result, it may be advantageous for the US and its allies to de-escalate the conflict, allowing Putin to do so. This is also known as détente, and it means that the West and Russia may reach an agreement and end the war. But sanctions must first be enforced to push Putin to de-escalate the conflict. This, in Chamath's opinion, would be the ideal outcome.
In the aperture of war, memories are short in the sense that, if you ratchet these things up very aggressively, now all of a sudden something from even 2 weeks ago seems like a much, much better place to be, right? And so that could be an off-ramp, which is like you basically find a way to take a lot of pressure off these economic sanctions in return for a détente. I mean, I don't know, but I'm making this up. I have no idea. I think there's a lot of chatter that historically economic sanctions aren't enough, which is why you can't draw a very clear, bright line between that and military intervention as well. And as I thought about it, this is why I think you can actually fight an economic battle and an economic conflict without it pulling you into a military one. And the reason is actually because of what's happened in the last 40 or 50 years. You have like the most critical infrastructure in the world, I think, is the financial infrastructure, whether we like it or not, right? Because, energy infrastructure tends to be more localized. Other forms of infrastructure are localized. But the one real asset that is absolutely global and universal is the financial payments infrastructure. And, what has really happened is that you can really cripple a country or an entity when you blacklist them from these organizations and these networks. And so this is why I actually think people underestimate the severity of economic sanctions if done correctly.
Because they were afraid that such sanctions would force the EU economies to implode, No measures to restrict Russia's energy exports are presently in place. As a result, the economic impact of the currently announced sanctions will be minimal outside of Russia and Western companies with exposure to Russia. The economic consequences of the conflict will be felt most strongly in Ukraine and Russia, both of which are expected to suffer severe recessions this year. Energy, supply chain, and trade shocks have afflicted the EU and will continue to do so. Another consequence is the already divisive worldwide shift to renewable energy resources. However, while the West is still participating in this economic war, let's not forget that Ukraine is still fighting a bloody military war against Russia. Over 1.5 million refugees have been fleeing their homes to Poland, Hungary, and other European countries. Putin has also sent a frightening message to the rest of the world, implying that he is willing to go to nuclear war with the West if we act in Ukraine with direct military force. Specifically, he said that his actions would cause us consequences never experienced before in your history. This serves as a chilling reminder of the 1962 Cuban Missile Crisis between the United States of America and the Soviet Union. Chamath talked about how war has a good impact on the crypto market and the US dollar. He stated that conventional wisdom is that the war in Ukraine is the crypto boon we've all been waiting for, and that the US dollar is on its last leg. But in reality, Bitcoin and the US dollar are both winning right now. When Bitcoin falls, other cryptos fall more. When US assets fall, other non-US denominated assets and currencies get smoked. After the invasion, Bitcoin spiked, but by the time Chamath tweeted it, had dropped back to pre-invasion levels and was continuing to plummet. Chamath is referring to the power of the US dollar when talking about US denominated assets. Holders of US government bonds will likewise have minimal danger of the US government defaulting on bond interest payments. To put this in perspective, US dollars account for over 58% of all foreign bank loans. That is not the case with the Russian national money. The ruble has dropped 41% in 11 days since the Ukraine conflict began. As a result, assets denominated in US dollars or valued in US dollars are fleeing to safety. The rising level of the DXY index, sometimes known as the Dixie, demonstrates this. In only a few days, the index has risen to its highest level in over 2 years. Chamath believes that the likelihood of a recession in the US is increasing, but before we get into that, we have to analyze the impact of Ukraine's war on the global economy. The Fed is currently signaling that multiple interest rates hike will occur beginning this month. If they need to change paths due to the economic effects of the war, then perhaps these policies will reverse. The conflict in Ukraine will have 3 major effects on the global economy: financial sanctions, commodities prices, and supply chain disruptions. Investors are concerned about the repercussions of the war and its aftermath, particularly when it comes to pension assets. However, investing in an emerging economy like Russia was already a small part of the market, and it's now become much smaller. Pension funds are well diversified and will likely have little to no direct exposure to Russian companies. Russian stocks account for only 2% of the MSCI Emerging Markets Fund. When asked about the possibility of pension funds losing value due to losses in the market value of Russian enterprises, Chamath said that he does not see this as a problem. He rejected the matter as a red herring, implying that it was only a diversion.
The reason it's a red herring is that the global total market cap of all of these businesses is meaningfully different than the amount of total capex that these guys represent. And in as much as you are going to take the equity values of certain of these companies to zero, it's in the grand scheme of things not that much equity value. In the last 2 years, we learned what governments are willing to do when you have supply shocks and demand shocks. And what they do is they turn on the money printer and they create enormous amounts of stimulus. Okay? And what we have now is a point where if these shocks are really, really, really meaningful globally, I think you're going to see the Federal Reserve and the ECB and the Bank of Canada and the Bank of Japan step in a very coordinated way to provide liquidity to these markets. And I think what that has the byproduct of doing is blunting the economic consequences to everybody but the person who is sanctioned.
Do you think that's inflationary as well?
No.
Many large Western companies with Russian subsidiaries have been quick to state their intention to sell off. ExxonMobil, BP, and Shell have sold their Russian energy stakes to a small group of buyers for probable rock-bottom rates. Investors who own individual stocks with considerable Russian exposure have seen their stocks' values plummet recently. For certain companies, the fire of sale of the Russian assets will lead to large losses in the short term that could cause a further crash in stock prices. One key uncertainty is the extent of assistance China provides to Russia in the face of economic sanctions. China could be able to provide an alternate route for Russia to undertake international commerce. While this is improbable, it does highlight the good potential of a hot war expanding from an economic to a military conflict.
I actually think we are at war. But it's the most positive form of it in the sense that we are learning a different kind of warfare. Now, if you think about how we used to fight, up until basically the Persian Gulf War, it was armaments and tanks. And then that evolved in the Middle East because we had to fight insurgents and, urban terrorism in many ways, right? I think this is a way in which we are learning that there's a different kind of warfare as well, which is fundamentally economic. And so, it may not take the same shape as drones and missiles and fire and guns and bullets, but I think you would be foolish to make the mistake that we are now not at economic war with Russia. And at the end of the day, the outcome is the same, which is either they survive or they don't survive. And everything we've done points to that we are willing to fight, and we are willing to put a lot of economic collateral and chips on the field in order to win this battle. So I think in that respect, we are kind of at a war. There's no amount of money that you can actually put on human life. And so if we can avoid a military war, I just think that there's no red line on cost there. And so if we end up running massive deficits and now we're at, 150, 250, 300% of GDP, I think that, morally that is the right thing to do.
There's still more reason to consider expanding your precious metals exposure in your portfolio. Stock market closures were widespread in a number of nations following World War II, leaving stock investors unable to retrieve their cash. Due to real worries about the currency's worth, money and credit were not commonly accepted by non-allied countries throughout the war. Analysts explained that losing a war usually results in a total loss of wealth and power, and that movements of stock markets that remained open during the war years were largely influenced by how countries fared in key battles. As these outcomes shifted, the probability of victory or defeat for each side. Because the West is limiting the global impact of sanctions, it is anticipated that the most serious effect of the war will be higher commodity prices. Commodity prices may rise as a result of three factors: physical infrastructure destruction, supply concerns, and sanctions. Although the European Union and US haven't imposed a ban on Russian oil, prices of oil, gas, base metals, and grains have risen rapidly. Inflation for February was 7.9%, which is the highest rate since the early 80s. This is due to higher energy costs that are getting even worse from the Ukraine conflict. The Fed expects to stick to their plan of a 0.25% interest rate raise. Such an increase is still relatively low and could lead to high inflation and unemployment at the same time. also known as stagflation. Raising interest rates slows down inflation, but in doing so, it hampers growth due to decreased business investment. While Chamath disputes the idea of stagflation, he does admit that we are approaching a recession.
We are now teetering towards a recession. Nick, you should throw this thing that I sent to you guys before. If you look back over the last 30 or 40 or 50 years and you look at every single period of when there has been a recession, what's interesting to note is that it's not always been the case that the price of energy has risen by 50% in a recession. But it is always the case that when energy prices spike by 50%, we enter a recession. We will contract as an economy. The government will have to become more accommodating. That is the price of this economic war that we have started. And I think it's a just price because what's happening is not supportable. I think what's going to happen is we are going to find a way to subsidize those prices coming down. And I think the simplest way to do it is for the government to step in and become a buffer. And it will drive massive deficits. It'll drive increasing amounts of debt. But I think that is a simple way for us to make sure we put and ratchet the pressure. And just to speak on this other point, we have only just begun. Meaning just today, as we started the pod, Biden came out with an incremental new set of sanctions on Russian crude. So we're not even in the beginning. We're at the beginning of the beginning.
Even though Chamath believes we're in a tight situation, he does see a solution to our problems.
Let's just say that, between the BOJ, Bank of Canada, ECB, and the Federal Reserve, we all just collectively printed $5 trillion. You can absorb many, many years of Russia's export loss. Now, it does have some gnarly implications. You probably have to work more closely, for example, with Iran. You have to get an Iran nuclear deal done. Why? So that we can get access to their oil, right? So it blunts the loss of the Russian reserves, as an example.
The resiliency of European leaders and the US has caught Russia off guard. We are at odds with one of the world's most powerful superpowers in terms of economics. Although Russia is facing the largest economic pain, there's definitely going to be an economic cost to the West as well. There will definitely be a great deal of uncertainty ahead. And Putin has shown that he is prepared to start a conflict in order to make his point regarding Ukraine. Let me know what you think of the economic effects of the Ukraine war. Comment down below. If you enjoyed this video, please hit the like button and subscribe. This is your Top Tech and Trades channel. Thank you for watching, and I'll see you in the next video.